What's going on, guys? How are you? How are you doing today? I want to show you this top-down analysis that you can use to trade. So this is a strategy that is based on top-down analysis, and you're going to be getting your entries on the M1. So welcome back to the Limitless Shocks channel. I hope you are doing well, and if this is your first time, make sure you are subscribed to this channel. All right, make sure you are subscribed, and let's go right into it. So what I want to show you is this: you start on the H4, then you go down until you get to the M1 for entries. So on the H4 time frame, this is what you are going to be doing. You're going to be using market structure for you to understand the direction of price, right? So if you are to look at this particular chart, right, you can see for a long time from the left side of the screen to where we are right now at this particular zone or this one, you can clearly see that this was an uptrend, right? This was an uptrend, and it changed at this particular zone and right now as it is. So after price has been going up for some time, right, it actually decided to take out these lows, which was an indication for us to what? To think down, right? To think down, which means we were thinking downtrend, which means in this particular zone, just below this red line, everything that is going to come here, provided we do not break a high down there, it means that we are in a downtrend, right? So here we are in a downtrend. We go to the H1. Why? Because we just want to understand the phase that we are actually in the market, right? At this particular zone, this is a move down, right? Then price actually thought to go up at this particular zone. This was an attempt of price to be going up, but as you see here, it made an anchor on the what? On the H1, which means that this was a continuation of a what? Of a downtrend, which means price is going down. So you know this is what you know, right? On the what? On the H1, you go down again on the M30. So what you want to do, or what you want to understand as you are going down these time frames, is you want to understand what is happening in terms of what? In terms of price, what is happening in terms of everything coming together and giving you an edge, right? This is what is happening. And remember, we are using the indices or the volatility indices on the what? On the World Trade platform, right? World Trade is a new broker that is offering what? That is offering volatility indices to trade, just as Deriv was doing. But these ones, I think they are better and they are more understandable compared to what Deriv is offering. So you need to get on this. And here we are on the M30, and you see that this is a very clear downtrend. If it is a very clear downtrend right now, you have to move to the what? To the M1. And on the M1, you are looking for very simple things, right? You are looking for very simple things. You don't want to complicate your life, right? What you are looking for is a move that looks like this. You are looking for a move down, right, on the M1. Then you look for a move up that looks like this. You are looking for a flag pattern, a move up. So this move up, a flag pattern that you are talking about, this is a what? This is a retracement, right? So you are looking for a retracement. After you get the retracement, then you look for where the retracement is ending on the M1. So on the M1, you look at this. This is the retracement pattern that you see, right? This is the retracement pattern where price is just consolidating at this particular zone. When price is consolidating there, what you need to take note of is to take note of when price is going to break a what? A break a low aggressively. When price breaks a low aggressively, as soon as that break happens, that is where you're going to be getting your trade. You are, remember, this is M1, so you're going to get the trade as soon as the break happens at this particular zone, and you're going to put your stop loss just above the what? Above the structure that you see on the M1. This is going to be your trade, and you're going to hold as far as, or as long as you think it is going to be what? To be true on the what? On the other channel, on the other time frames where you would have started from. But you don't need to be greedy. You need to get your risk to reward ratios in check so that you don't need to be staying in the market for long. All right. So what you are doing here, this is a retracement that you are talking about. So in that retracement, what you are waiting for is a what? Is a break of structure. After a break of structure is in, price breaks the what? The price breaks the low, or price breaks the what? The channel that you have drawn, right? You are going to be getting your what? You to be getting your trade right there. Why? Because this is a what? This is the M1, and the stop loss is going to be small either way. So this is how your trade is going to pan out. Look at this. This is a very exaggerated or a very big move or a very big flag that you see. So after price breaks a what, breaks a low at this particular zone, this is where your trade is going to be, and you're going to put your stop loss above the what, above the structure as you see there. So this is the break. As you can see, price breaks down and price continues to what, to break down. So this is what you're doing. And if you are looking at this, you can see that we have that same pattern at this particular zone. You see what price is doing there. This is the same pattern. And what does price do? It breaks this particular low. So you could have gotten this particular trade at this particular zone, and you could have had your stop loss above there, above here. So this is what price would have done to you. And if you were very if you were following this, maybe you could have gotten this and you could have been stopped out at this particular zone. But if you had taken this one, you could have been out with what, with 1 and 2, which is very respectable when it comes to trading. So you don't have to understand everything that is happening. You just have to understand what is happening in that particular time frame. So here we are looking at the H1 on the M1, sorry, with the understanding that on the H4 and the H1, this is what is happening. So from here, what you are seeing here, you can apply this on any chart. So I'm going to show you what is happening on the what, on this particular chart, and this is what, this is gold. So on gold here, we are going to be going to the H4, and on the H4 I'm going to show you what the H4 is telling us. So this is what the H4 is telling us. The H4 is telling us that this is more like a what, an uptrend, right? This is an uptrend, right? If you go to the H1 right here, you will clearly see that on the H1 again, this is a very clear uptrend. So what do you need to do when you go to the M1? When you go to the M1 now, you need to understand that you are just looking for what, for price to be doing those moves down, a retracement, and after the retracement ends, you're going to be getting into that trade. You see, this is the retracement. As soon as price breaks there, this is your trade. So what you are going to be doing on gold here is get that trade, stop loss here, and you go for 1, 2, 1 and 3, depending on what you are doing. And if you understand this idea of going for risk to reward ratios, then you have no business trading your $10 accounts, $10 accounts. You need to be plugged with a real prop firm, because love it or hate it, a prop firm is the way of the quickest way for a trader who is under capitalized to actually go to where he wants to go. So this is the way to go there. And what you need to be doing is to buy a challenge on Funded Next. The links are in the description down below. That is the prop firm that I trade with, and that is the prop firm that I trust. And if that is something that looks good to you or that sounds good to you, you need to buy a challenge. And after buying a challenge, you need to be using this particular strategy so that you understand where price is going and how you are using price to your advantage, how you are using this to your advantage, right? Right now, we are in an uptrend. So what do you do in an uptrend? You're just looking for what? You're just looking for these retracement patterns. And after identifying the retracement patterns like this, you are now going to what? To wait for a break. After that break is pinned in, then you go. And if you are going to be looking at this, you can actually look for price where price is just breaking highs on the H1, and you can continue with that. When price breaks highs here, gives you an order block at this particular zone, you are using that to your advantage, because the markets are fast paced on the what, on the H1, and this is something that you can use to your what, to your advantage, right? So this is what you are doing on the M1. But remember, you are coming from the what, you are coming from the H4, you are coming from the H1, you are coming from all these places where you see price doing its bid. So right here, we are in a retracement. Why? Because price is going down. So what are you waiting for as a trader? You are waiting for what? For price to break any of these highs as price is going. Look what is happening here. If price breaks here and does this, you are going to just get your trade, your buy trade at this particular zone, assuming that you have $100,000 challenge from Funded Next. Then you get this particular trade. If it happens like this, then it means you are going to what? To risk $1,000, and you're going to get $3,000. And that, if that is a Funded Next account, right, it means that you're going to get 80% of that 3K. I don't know how much that is, but you can calculate and see how much you would have made if you were under a prop firm, as I'm telling you. So I'll see you in the next video. This is what I wanted to show you on the M1, on the top down analysis from the H4 to the M1, and I hope this was helpful, and I hope it can help you in your trading careers as you trade. I will see you in the next video. I'm Shooks, and I'm out.